Good morning. The U.S. financial markets are heating up again. Stocks are hitting fresh highs. An expected rate cut from the Federal Reserve is looming, and big tech is charging ahead on the back of AI deals. But beneath the enthusiasm lies a crucial 48-hour window that could redefine where this rally goes next. Let's dive into all the major updates: stocks, gold, crypto, commodities, and what investors need to know right now. US stock market. U.S. stock futures are pointing higher today. The S&P 500 futures are up around 0.5%, while the Nasdaq 100 futures are climbing on the back of strong momentum in big tech. Nvidia Corporation alone surged in pre-market trading after announcing $500 billion in AI chip orders and plans to build supercomputers for the U.S. government. The close yesterday, the broader stock market also delivered. The S&P 500 and Dow Jones Industrial Average both hit all-time highs, extending the rally for a third straight session. Why is this happening? The main drivers: expectations that the Fed will cut interest rates by 25 basis points this week, optimism around a potential trade framework between United States and China big tech, earnings and AI investments fueling investor risk appetite. Investor view: given the momentum, there's about a 65–70% chance for further gains in the next 24–48 hours, especially if tech earnings are solid and the Fed language remains dovish.
But volatility remains, and if the Fed signals a pause or trade talks deteriorate,
downside risk could jump to around 30–35%. Avoid heavy exposure in weaker sectors until after the Fed decision. Gold and precious metals. In the precious metals space, if you're looking to invest now, consider selective exposure in AI-driven tech stocks. Gold is under pressure. The breakdown in safe haven demand on risk-on sentiment is pushing the gold price lower. With markets betting on better economic growth and policy easing, investors are shifting toward equities. Investor view: short-term downside for gold is elevated. There's roughly a 60% chance it may break below key support levels. Long-term, however, if inflation resurges or trade issues flare, gold remains a hedge. US dollar and commodities. The US dollar is holding firm amid the rate cut speculation, which can weigh on dollar-priced commodities. Oil, specifically crude oil, remains in focus as supply-side concerns and global growth expectations keep it elevated. Investor view: a stronger dollar plus elevated oil prices favor energy and material stocks, but increase risk for consumer-sensitive sectors. Probability of oil pullback in next 24 hours, around 40%. Upside continuation, 60%. Cryptocurrency market. Crypto markets are reflecting the broader risk-on mood. Bitcoin and Ethereum are trading higher as liquidity flows back in, driven by expectations of lower interest rates and increased institutional adoption. Investor view: short-term, crypto appears set for a 70% chance of upside, but given volatility, a 30% chance of sharp pullback remains. Consider size exposure accordingly. Market outlook and what's ahead. The next 48 hours represent a critical test for the markets. The Fed statement, big tech earnings, and US-China trade developments will combine to set the tone. If all signals remain positive, rate cut confirmed, strong earnings, trade deal progress, equities could rally further, with sub 70% probability of upside in the near term. If any of these disappoint, a pause from the Fed, weak earnings, trade setback, downside risk jumps to around 40–45%. For investors, maintain core holdings in strong companies, especially tech and AI. Use dips to add rather than buy at the top. Keep a cash buffer in case markets pull back. Hedging with selective gold or high-quality bonds may be prudent. Closing. Call to action. That wraps up today's U.S. market morning update. Stocks are charging, gold is under pressure, crypto is awake, and the Fed decision could be the next big catalyst. If you found this breakdown helpful, hit like, subscribe, and ring the notification bell so you don't miss tomorrow's update. Until then, stay informed, stay ahead.